Thanks for tuning into the weekly wrap this Friday, the 21st of August. I'm Jessica Amir, a market analyst with Bell Direct. The Aussie share market hit a two-month high this week but lost momentum, slipping 0.1% to Thursday, marking the first fall in 3 weeks. Investors had a lot to think about with 30 companies reporting, the busiest week so far this reporting season. Of the companies that reported, 7 beat market expectations. They included WTC, Corporate Travel, Bapcor, Mount Gibson Iron, NRW Holdings, Pact Group and Red Cape Hotel. Of those, WiseTech Global, the technology logistics company, reported the most notable result. That sent its shares up 38%, making it the top performing ASX 200 company this week. Its FY21 results were stronger than expected, driven by lower costs, which helped its profits soar 200%. WiseTech also guided a stronger FY21, with logistics chains expected to recover well. Amid the bright outlook, Credit Suisse, Macquarie and Bell Potter all upgraded WTC, with $28 the most popular price target. 16 companies this week delivered results in line with what analysts were thinking, known as consensus. They included A2 Milk, Brambles, Car Sales, Crown Resorts, CSL, SDA Health, Data3, Fletcher Building, Mineral Resources, Moelis, Nearmap, Oz Minerals, Saracen, Silver Lake Resources, Smart Group, The Reject Shop and Vocus. While on the other side, 7 companies missed expectations. They included APN, Industrial REIT, Dexus, Vicinity Centres, Webjet, Domino's Pizza, Northern Star, InvoCare as well. Now, of those, Vicinity Centres and Webjet both fell over 8% this week, forcing them to take a seat at the ASX 200 worst performing table. But if we just think about the themes that emerged this week, given that we're all spending a lot of our time at home, commercial rent collectors, landlords like Vicinity Centres and Dexus under-delivered, missing forecasts and also not guiding what FY21 holds, given lower occupancy rates and rents, particularly in Melbourne. Secondly, we've seen death rates decline according to the ABS. Ironically, death rates are below their 5-year average. Now, this is why funeral businesses like InvoCare IVC reported a notable miss on market expectations. InvoCare's fundamentals do remain strong, but given more people are indoors and extremely health conscious, there's a lot less funerals. This is why IVC didn't provide guidance for what to expect in FY21. On the positive side, with us spending more time around our humble abodes and more likely to catch public transport, car tinkering is on the up. Now, this is why car part and servicing business Bapcor shone, with sales revving up in May and June and carrying into July. Bapcor also reiterated its 5-year growth targets, with sales surging. Other key winners this week were those companies benefiting from the China recovery, the uptick in mining activity and the iron ore price trading at year highs, with NRW and Mount Gibson Iron both packing a punch, expecting growth to continue this financial year. But what about the big picture? Well, if you tallied up the 69 companies that have reported so far, the majority, 46%, have been in line with market expectations, while 35 have pleasantly surprised and 19% have delivered sour grapes. This explains why the market has not shot the lights out this week, and why you might need to focus on picking the right stocks in the right industries if you want to generate above average returns. Whereas if you think about the US, 82% of the S&P 500 companies have reported so far, mostly beating expectations, even though earnings are down 33% year on year. This has helped the S&P 500 hit a brand new record all-time high this week, erasing all of the COVID-19 losses. A big part of the US market, though, are tech stocks, which are continuing to benefit from the shift to working at home. The tech-heavy Nasdaq flexed its muscle again, knocking the top off its previous record all-time highs, and this was helped by Apple, one of the biggest companies in the world, becoming a $2 trillion company this week, the first time that a US company has reached this milestone. To put that into perspective, Apple is now worth more than the largest 500 stocks that make up the Aussie stock market. Now, moving what to watch next week. Well, Fortescue Metals reports on Monday the 24th, with consensus expecting $4.71 billion US in profit. FMG is a UBS buy with a 1750 target. Secondly, City Chic CCX reports Tuesday. This has been outperforming the market due to the shift to shopping online and the boom in US. It's also building scale and its balance sheet is strengthening. Profit of $16.2 million is expected. CCX is a Bell Potter and a Goldman Sachs buy, with Goldman's targeting $4.15. Thirdly, Propel Funeral Partners PFP reports Tuesday the market's looking for net PAT or net profit after tax of $12.6 million. It's a Bell Potter buy, $3.65 target. Now, Lovisa LOV reports Wednesday the market's expecting net PAT of $21.8 million. It's also a Bell Potter buy with a $7.50 target. Woolies, the supermarket giant, reports on Thursday net profit after tax of $1.67 is expected. That's less than last year. It's a City hold with a $41.50 target. And Afterpay reports on Thursday with earnings or EBITDA of $43 million expected. It's a Bell Potter buy with a $92.50 target, and Morgan's is giving it a $100 or $101 target. On behalf of everyone here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. We'll see you next week.